Delighted to see so many of you here. I was slightly nervous that the train strikes might limit the enthusiasm, but I guess the draw of the central bank and what is a very important event has given enough incentive to battle through the traffic. So you're very welcome. I'm delighted to be introducing, kicking off the event this evening. It's an important topic, an important event. Focusing on ensuring that the foundations are in place to safeguard the long-term well-being of the credit union sector. I'm also delighted to take the opportunity to introduce those of you who haven't met him, Patrick Casey, who's the new registrar. Patrick has a wealth of experience both within the bank and externally that I think is very relevant to the credit union sector. He has a long-standing interest and commitment to the sector, and the drive and determination, I think, to be an excellent registrar. And I'm very confident that you'll be in very safe hands. And I was delighted to pass over the baton. I was also delighted to have the privilege for a very short time to be the interim registrar between Anne-Marie and Patrick. I've had a growing interest in the sector ever since I returned to Ireland in 2012, and that has continued through that, and further informed by the short term over the summer months acting as registrar. Certainly continue to see the potential in the sector, and also so the challenges that it faces. So, and I'll share a few reflections on that in a second. Before I do, I'd just like to take the opportunity to publicly thank the members of the registrar who've been so supportive of me in that period, and also for all those within the sector that I've engaged with during that time. And I'm sure I'll continue to rely on that in my new role. In terms of the sector itself, what I see and I'm continue to be impressed by is the ethos of the sector, of all of you, the willingness and drive to put your members first, the community focus, the volunteerism, and I also see that the credit union sector has a hugely important role to play in society as a whole and in the financial services system. I've also seen over the last few years a good amount of progress the sector has made in terms of continuing to improve its resilience, the level of restructuring that's been undertaken in a pretty safe way to address some of the weaknesses or the most challenged credit unions, improvements in terms of governance and control, and a degree of stabilisation and growth returning to the sector, and I think all of you should be applauded for that. I would also note that I think that there is a lot of commonality in our views within the central bank as to the future of the sector and what I would expect from yourselves in terms of the strong functioning, the continued success and growth and long-term thriving of the sector, and that's certainly what I'm always impressed with in terms of the commitment within both the movement itself, but also within the registry. Having said all that, I continue to see that there are challenges. I spoke at length on some of those when I addressed the Irish League of Credit Unions at AGM, so I won't dwell on them today, but I still see that there are some significant challenges in terms of long-term viability of credit unions. And there's a lot of talk about the loans to members' funds ratio, which continues to be a challenge. The continued need for business model development, the need for I think a clearer vision and greater degree of leadership coming from the sector in terms of delivery of that vision for the long-term safeguarding and viability of the sector. Continued work needs to be done in terms of governance and control. And there needs to be continued work in terms of embedding of the restructuring arrangements and really getting the business model benefits from some of those. The central bank, for its part, will continue to play its role in safeguarding and strengthening the foundation of the sector. We've continued to work with you, I think, and also challenge you in terms of the arrangements within each credit union around safeguarding members' funds. We've continued to try and support business model development, as work on payment accounts. Very shortly there will be a discussion paper issued on longer term lending. We consulted recently on the investment framework, and will be very shortly, I think in a short number of days, be issuing the feedback statement associated with that. And I'm sure you'll hear more on each of those topics over the coming couple of hours. I will just dwell a little for a moment on the investment framework, just to say a couple of points. We absolutely recognise that there is a need for greater optionality in terms of the investment decisions that credit unions have, but it's clear to me that the purpose of a credit union isn't as an investment firm or a savings club, and so it's a byproduct of what you do rather than a key part of the business. But I do recognise there is a need for some greater income generation through the investments. I would also emphasise that while there is a degree of loosening in terms of our framework, the risk sits with each of you, and the need for you to have very clear understanding of the risks you're taking in terms of increasing your own risk appetites around investment. And also say in terms of your roles, it's very important that you're playing your part in continuing to drive the sector forward, and I'm sure you're all committed to that in terms of continuing to improve the governance and control, to delivery of the business model development and that longer term vision. And I'm sure through the work of yourselves and the members of the registry that longer term vision can be achieved. So I'll finish there. I'd just like to thank the organisers of today's event and the ones that are coming in the future. I think they are important sessions in terms of our continued engagement with each of you, and also with the representative bodies, and also our commitment to engage through the likes of Quay. And I wish you a happy and successful evening. So thank you.